What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and we're going to be going over our weekly watch list for the most anticipated earnings releases for next week and some really nice options plays for you guys to play on these stocks. Of course, you don't have to play options. You can just outright buy shares of the stock. But we got three earnings coming up this week that we're going to be watching. Obviously, there's Monday's a holiday. There's not much earnings this week. But there's three particular companies, and probably the one that stands out the most is actually going to be GameStop, which has earnings on Wednesday after the market closes. So we also got Dave & Buster's, as well as AFRM. So we got three solid stock earnings that we're going to be watching and also playing these stocks next week. So we're going to start with Dave & Buster's. This stock is doing pretty well over the past year. It's almost doubled in price. All-time highs, or 52-week highs, is almost $50 per share. I personally bought quite a bit of shares at the $18 price point back in late October in my Roth IRA and with Vanguard. So I'm pretty happy to see that the stock has pretty much over doubled its price. So really nice returns on that. But it does seem like it's pulled back quite a bit since it was at around $49 and now it's at sitting at $36. So 13% or $13 price decrease. So Dave & Buster's reporting earnings looking like a solid earnings. It's been doing pretty well ever since the reopening. As we could see, the previous earnings was pretty good, especially since all the reopening. A lot of people want to get out there, do a lot of entertainment stuff, and Dave & Buster's is definitely a really hot spot for entertainment. They have arcade games, bowling, they have a bunch of stuff. They have a nice bar. Just a great place for family-friendly fun as well as young adults. So we're pretty bullish on Dave & Buster's, and I do think it's a really nice price point, even though it's up 95% on the year. But of course, favorite way to play earnings is selling some cash-secured puts, just because implied volatility is very high. I like to sell cash-secured puts maybe between like a day or two before the earnings. And selling cash-secured puts is a good way to capitalize on high implied volatility just because the premiums on options are going to be pretty high. So if we take a look at implied volatility, it's over 100%. People are anticipating a pretty nice move for Dave & Buster's stock, especially with how crowded their facilities are right now, just because everyone wants to get out there, do some entertainment. A lot of people are bored at home. They just want to have some fun. So take a look at the charts. It's having a triple bottom, so it's looking like a really solid support at this $32 price point. So we're going to be selling some cash gear puts. Premium's not looking too hot. Yeah, $32 strike right here. This is going to look like a really nice contract right here. Bid ask is pretty wide, so I don't think we can get filled on that. Yeah, probably not. So I would probably do like a $33 strike. Your break even is going to be around that $32 price point. And you're going to have to put down a collateral of $3,300. People with small accounts can definitely afford this. It doesn't seem like a lot of money, $53 of premium. But if you do this week over week, it definitely adds up. And eventually you'll get enough buying power to play some higher priced stocks. So this is definitely over a 1% return in just 1 week. Particular calculators, we're going to calculate how much return it's going to be. So it's going to be $3,300 minus our premium. And that's going to be our collateral. So $53 divided by our collateral of 3247. That's going to be a 1.6% return in a few days, basically. Really nice return. It's not going to get you rich. We will be going over some get rich quick options plays some other day. But this is a stock actually that I wouldn't mind buying call options on. As we can see, premiums are pretty low on the call side. It's been beaten down pretty hard ever since it's been on this nice little, I would call it, bear trend. So premiums are pretty low. If you want to take a gamble, these are going to be some really nice options plays for you guys. Really cheap too. It's going to cost you $100. Or if you want to buy like a $39 strike, it's going to cost you $60. Really cheap. Really good profit potential with this stock right here. So two other earnings is going to be AFRM, and it recently exploded late August when it announced a partnership deal with Amazon. So really nice revenue is going to be coming into AFRM's hands. In this stock, it had all-time highs of around $140. So, and that was before the Amazon partnership. But of course, it did have quite a big decline ever since its all-time highs. But we're seeing a lot of traction back with the firm now that they're basically guaranteeing some nice revenue. So we're definitely going to be watching AFRM as well for next week. And if you want to play options on it, we'll take a look at the premiums. You can sell a $75 cash geared put for $88. Pretty nice premium rate here for such a low strike price. $75 strike price, that's almost $20 under the current price. So lots of premium on this stock. Take a look at our calculator for our return. It's going to be like 1.5%, just like Dave & Buster's. I mean, 7,500 minus $85 of premium. That's our collateral. $85 of credit divided by 7,415. 1.15% return. So that's pretty good for just 1 week. Really high chance of profit as well, 87%. So you're most likely going to be collecting your premium in full. And of course, if it drops below $75, you're going to have to pick up 100 shares of this stock at $75 each. So really nice dip buy opportunity if you so wish. Last stock is, of course, the infamous GameStop, sitting at a price point of $203. It's been having a really bumpy ride, but overall, it's really maintaining its $100, $200 price point, which is very interesting. It shows that there's a lot of strength in GameStop. A lot of retail investors are definitely holding onto the stock. They're not selling. They're waiting for the next big movement. And GameStop earnings definitely could be the catalyst that moves all of the retail stocks, the short squeeze stocks, including AMC, BlackBerry, as well as Wish, Clover, Health Investments. A lot of these retail short squeeze stocks also support.com stock. So we're going to be really watching this stock and seeing what movement that this stock will entail from earnings. Take a look at the previous earnings. It's been beating earnings for sure, and they're definitely anticipating a higher revenue growth for this quarter. And they are reporting earnings on Wednesday after the market closes. So we're definitely watching GameStop, and I know a lot of shareholders are definitely looking forward to this event. It's definitely going to move the stock. We just don't know which direction, but hopefully it will be in the favor of the retail investors, and hopefully there will be a lot of buying pressure for this event. So that's about it for this video. If it helped you in any way, please leave a like, comment down below your thoughts are on these earnings, as well as what your watch list is, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.